VIGL is up a massive 241.56%. This is on the news that Sanofi has planned to acquire the company. It's willing to pay $8 for all of its shares. And according to Gemini's AI, when a merger is announced, the stock price of the target company, VIGL in this case, typically spikes, often moving closer to the announced acquisition price. We saw an intraday high print here. Price be above a slight premium to the $8 target. So often moving closer to the announced acquisition price. This happens because the acquiring company usually offers a premium over the target current market price to entice shareholders to approve the deal. However, it's common for the target company's stock price to trade slightly below the indicated acquisition price even after the announcement. This difference, known as the merger arbitrage spread, reflects the market's perception of the risk that the deal might not close or might be delayed. These risks include regulatory hurdles, antitrust approvals, or other governmental clearances, shareholder approval. Shareholders of either company might vote against the deal. Financing issues. The acquiring company might struggle to secure funding. Material adverse changes clause. Events that significantly harm the target company's business could lead to the acquirer to walk away. Alternative bids. The possibility of a competition, higher bid from another party. So, do stocks retreat from the indicated acquisition price days after? Yes, it's possible for the stock price to retreat slightly from the initial spike if the market perceives an increased risk of the deal falling through, or if new information emerges that casts doubt on the acquisition. This retreat generally means the merger arbitrage spread widens. Do they retest the acquisition price thereafter? The stock price will tend to converge on the acquisition price as the deal gets closer to the completion and the risks associated with it decrease. If the deal proceeds smoothly, the stock will gradually rise towards the offer price. On the completion date, if the deal is all cash, the shares are converted into cash at the acquisition price and the stock is delisted. If it's a stock for stock deal, the target company's shares are converted into shares of the acquiring company at a predetermined ratio. However, if the deal faces significant setbacks, such as regulatory rejection or a major shift in terms, the stock price can drop significantly, potentially falling below its pre-announcement level. In such cases, there wouldn't be an acquisition price to retest as the deal would no longer be on the table. So, in summary, initial spike, the target stock jumps towards the acquisition price upon announcement. Arbitrage spread, a slight discount usually persists due to deal risk and retreat. The stock might retreat if deal risk increase or new negative information arises. Convergence, if successful, as the deal nears completion, the stock price generally moves closer to the acquisition price. No retest. That is if the deal fails. If the merger falls through, the acquisition price becomes irrelevant and the stock price will likely decline, not retest the price. Merger arbitrageurs specifically try to profit from this spread by buying the target company's stock and holding it until the deal closes, hoping to capture the difference between their purchase price and the acquisition price. Okay, so that's what's going on. Okay, well, sometimes I try to conclude that some of these deals will complete, but in the event it doesn't complete, yeah, there is some risk there. We're looking at a plunge towards 4.5 4.13, 3.65, even all the way down to 2.88, 2.76, 2.5, 2.61, and even lower prices. So it sounds like a good acquisition for Sanofi. Yes, the company has a couple of VGL has some pipelines, some one for the treatment. Okay, you can see that here. VGL shareholders will also receive additional $2 per share in cash payable following the first commercial sale of the in development Alzheimer's treatment VG 3927 if achieved within a set period. So we don't know those details. Um, that we may find out from reading the disclosures of the company. Yeah, disclosure probably of VIGL in the coming days. Yeah, but that's what's going on. It's an acquisition bid that has seen it print this lofty high. So uh, you know, there could be things to be made here. There could be money to be made here. Yeah, it's quite stable. So short sellers could come and sell it. You can see I saw it fluctuate between 7.87 and 7.8. So there could be things to be done here. There could be things to be done here. It's optionable as well. I think it is optionable. Yeah, so they could do things. They could do things. So see what you make of VIGL, and thank you very much for watching this video.